work visa, you mentioned the fact that people are interested more in work visa. I know for a fact that personally there's a perception around here that more than more than moving into the USA regarding education, higher education, people are prone to look for jobs out there. So when it comes to that interest, what sort of advice can you give the applicants or the potential applicants out there who want to give it a try? What sort of qualifications do you basically need to have? I know that for a fact that language is very important, but apart from languages, apart from speaking English properly, what else do you have to have in your bag when it comes to applying for a work visa in USA?
Well, you can't really apply for a work visa. You need to be sponsored by a company in the United States.
Exactly. Okay.
That's how you even find out about the program. It's not like you come into the embassy one day with an application and say, hey, I want to work in the United States. It doesn't work that way.
Yeah, but people think that way. That's why I wondered whether you have any information on that.
Yeah. And I would say a lot of people find out about their jobs because they were students in the United States.
Yes, yes.
Yeah, that's one of the great benefits of studying in the United States. After you complete your studies for 1 year, you can do a 1-year internship.
Exactly.
And a lot of times those turn into the permanent jobs.
All right. So, would you please mention the website one more time for the audience before we wrap up?
Yes. And so the embassy's website is srilanka.usembassy.gov. And then to apply for the program, it's www.dvlottery.state.gov.
Okay. So with that note, we will be going into a break and we'll be coming up with a new guest. So thank you so much, Ms. Sally Sternal, for being here.
Thank you for having me today.
And for such a lot of valuable information and for clearing all sort of misconceptions. I'm sure there are lots of people who are watching out there having right now. So thank you so much. It was a privilege to have you. We will be seeing you with a very interesting guest, a familiar guest that you already know, right after this break. So stay tuned. Welcome back to Good Morning Sri Lanka. I hope you are enjoying your morning right now. Before the commercial break, we were chatting with Ms. Sally Sternal, the Consular Chief of the U.S. Embassy Colombo, who gave us very valuable information about the diversity visa, or well popularly known as the Green Card Lottery Program. So if you have missed that section, too bad for you, but don't worry, you can check us out on YouTube as well. But right now, like I mentioned to you before the break, we have a very familiar guest with us who was with you last week as well. We have Mr. Shafraz Salim, who is engaged in brand management, who is also a lecturer at CIMA and ACCA, and he is also a corporate trainer for companies abroad. Hello.
Hello, good morning.
How are you doing this morning?
I'm good. How are you doing?
I'm doing great. I'm all up and excited right now. Yeah, so tell us a bit about your background in finances.
My background in finances, I mean...
In case anybody missed out last week.
I mean, you've given an introduction, a long introduction. So the point being, I mean, my background in finances is because I have been experiencing finance ever since my, early days.
Okay.
Till now, and I feel experience itself is life. I mean, life
Yes.
deals with finance. So more than my book qualifications or rather than my work experience and stuff like that, it's more about me being gradually engaged. I read a lot in terms of finance, and also day-to-day engagement in finance makes you, kind of think of finance all the time.
All right, so was that your passion ever since you were small?
My passion is marketing. But then the point is, your bread and butter comes because of finance.
Yes.
So yeah,
exactly.
Finance, managing finance, you be a doctor, you be a lawyer, you be whoever. Finance needs to be at your fingertips, because otherwise, whatever you get, you lose out, because we hear celebrities.
Yes.
I mean, the most popular stories of celebrities that you hear at the end is the fact that they had a hell of a lot of money, finally they went bankrupt. That's
Yes.
because you bring in money, but you don't know how to manage that guy, because he leaves you immediately. That's where finance comes into the picture.
All right, so talking about getting that guy in and not letting him go,
Yes.
We are today focusing on investment. So for people out there who absolutely have no idea about investments, like I myself right here, please tell us, give us a brief introduction about what investment is.
So if you look at the word investment, it's basically very simple. If you think of a proverb, you give someone fish, he eats for a day. You teach him how to fish, you eat for your entire life. So the point is, it's about teaching someone how to fish.
Isn't that a Chinese proverb?
It is. So that's why I said it's a proverb. So the point being, you tell that person, look, You need to go out there and know how to fish. And what do we talk about fish in this instance? Money. Because the point being, earning money is very simple, right? Because go to work, get a paycheck, come back home, very easy. Then also saving it is quite easy, because once you do a budget.
You're the first one who I've heard who said that earning money is a simple thing and saving money is even simpler.
Relatively. I'll come to the difficult part. So saving that money is also quite simple, because if you have a proper budget, which we discussed last week, you anyway save your money in a till. But the point being, when you have money in a till, it remains the same. Because you take a loaf of bread in the year 1995, it was 3 rupees. Today you're looking at 55 rupees. So if I had money in the till, it could buy me just 1/12 of bread that it bought me in 1994. So how do you need to consider money as employees working for you. The moment you bring those guys in, you need to tell them, look, you're not staying back at home, you don't have holiday, you need to go out
and work
and start working. Why are you working? To earn more money, or more people like you. So all of you people get together and buy your boss a Porsche.
Okay.
That's the idea of money. And asking them to go out and work is investment.
All right.
Basics.
So that's just the basic.
That's
all
just
right.
the basic.
So interesting. So in order for you to become, in order to individual to become an investor per se, what should we think about? What should we consider?
Okay, the point being, there's no blanket approach to investing. So I can't say, okay, fine, I mean, what fits you fits me. It doesn't. Because every person's cup of tea is quite different. So the point being, first of all, before investing, before even thinking about investing, you need to go and stand in front of the mirror.
Okay.
Then ask yourself, okay, fine, what am I? Who am I? How much of money do I have? How much of money am I willing to send out? And then how long am I willing to send that money out? Maybe there might be a disaster in 6 months, maybe marriage. So then in that case, I mean, if you consider that disaster, it costs you a lot of money. So the point being,
which is the case these days a lot, I
exactly.
guess.
So you need to pull that money back in.
Okay.
Otherwise, if you're not going to get married for good 10 years, then it's a wise and smart decision. Then in that case, that money can stay out for 10 years. So the point being, ask yourself, who am I? How much money do I have? How long can I keep it out? Am I risk averse or risk for? Some people love taking risk. I mean, bungee jumping is not risk. You go to the stock market, you go to finance, now that's a risk.
Okay.
Because you send money out. If you want 10 rupees to go out and become 100, you need to be also willing to lose that 10. Whereas some people say, I want 10 rupees to go out and get 10.50, worst case 10. So you ask all these questions. Once you asked all these questions, then you tailor make an investment for you. That's the investment you go for. That's the first thing you need to do before investing. Ask yourself, who am I?
You mentioned an acronym to me, I understand.
Yeah. So basically the point being, I always ask myself a question. VFM stands for WIIFM.
It's not a radio station.
No, it's not a radio station at all. It is what's in it for me.
Right.
So whenever you invest something, ask yourself a question, what's in it for me? Some people, you get a huge amount in return. You love that because that's your risk appetite. But for some people, it really doesn't excite. So ask yourself the question, what's in it for me? And then, investment can be sorted out.
All right, so that's very interesting. You simplified it really well. Okay, so slightly moving away from the basics of investment, we have a video prepared for our audience, and this is about how to create a diversified portfolio. So let's check that out right now.
How to build a diversified portfolio.
Brought to you by TIAA CREF.
The best way to weather the ups and downs of the market is to have a balanced mix of assets. While a diversified portfolio doesn't guarantee against loss, it can help improve returns over the long term. You will need assets, a savings plan, risk tolerance, and a long-term perspective. Step 1. Take inventory of your financial situation. Get a complete picture of your savings by looking at all of your assets. Savings in the bank, money in your employer's retirement plan, IRAs, even real estate. Step 2. Give some thought to your financial goals, your time frame, and how much you'll need to save to reach them. Seek help from an objective advisor who puts your interests first. Step 3. Consider your risk tolerance when it comes to investing your money. While risk can't be avoided entirely, the higher the risk, the higher the possible return or loss, and the lower the risk, the lower the possible return or loss. Use online calculators to help determine your risk tolerance. Don't try to time the market. Even the experts have trouble predicting when to buy low and sell high. Step 4. Spread your money across different types of investments, such as stocks, bonds, and money market investments, as well as real estate and guaranteed accounts, such as fixed annuities. If you have many years to save, allocate a portion of your assets to equities. They may be more volatile in the short term, but historically produce returns that outpace inflation and other asset classes. Life cycle funds automatically adjust asset allocation and can be an easy way to diversify your portfolio. Step 5. Rebalance your portfolio at least once a year. And don't let dips in the stock market panic you. Rebalancing doesn't protect against losses, but it can help you to stay on track to meet your goals. Did you know, according to a recent survey, nearly a quarter of 55 to 65-year-olds have 90% or more of their assets allocated to equities?
So become your future you.
All right, that was interesting. Shafraz, do you have anything else to add into that those instructions?
Okay, I mean, just in a nutshell, whatever we watched. What is a diversified portfolio? It's very simple, because sometimes what happens when you have all your assets or all your investments alike, it could be risky, because sometimes what happens, you have all your money in gold. And you know, sometime back gold hit a price of $1,900, which was an all-time up. Suddenly it went down to $1,200. Now imagine if all your money was in that disaster.
Yeah, I know.
Now Enron, I mean, if you take some time back, the Enron scandal, the most debated or the most argued about scandal.
Yes.
If you take the particular company which was involved in this scandal, the stock market share price went to $91. Within 6 months it came down to $1. So the point is, if you have all your eggs in one basket, chances are you will lose out everything. So what we are trying to say is you have different kinds of investments. So even if one goes down, the other saves you.
Right.
And also as an individual, you have a risk appetite. So sometimes you need high risk assets as well as low risk. So something can balance yours. So that's the gist of it. Rather than going for everything in one basket, maybe you're lazy. Maybe you feel it's okay, let's finish it out. But the thing is, you need diversity. So something pays off, something goes down. Net to net, you're still safe.
Can you give us examples about diversity? How, what are the categories that you should focus on when you look for different assets?
Okay, now see, for example, if I need a low risk investment, I'll definitely go for a fixed deposit.
Okay.
Yeah?
Okay.
Trust me, I hate interest. Because the point is, the interest rate that you get
Yes.
is never sufficient to cover even the inflation rate.
Yes.
I'm true enough, it is reported that the inflation rate is quite low, but the point being, I don't agree with the inflation rate that's published.
Yes.
Because the point being, how sure are you that 6% or 7% inflation rate that you see in a boutique
Yes,
shop?
true.
Prices are way much higher than that.
True.
So interest rates are not at all attractive, and I hate that concept. But the point being, that's a low risk, because it's guaranteed every month you're going to get that amount. Second thing, you might want to go for a low risk play, let's say interest, or maybe even treasury bill issued by the government, because those are guaranteed money.
Yeah.
And let's say I'm in a mood to play it risky. I would go and purchase, I would go to a stock market, look at a stock that's been volatile. Now sometime back, I mean, you know, a company had a popular appointment into its company, and suddenly the stock price went up. And when the person resigned, the stock price went down within days.
Okay.
That's a volatile investment. I would go for that if I want to make quick bucks.